Good morning. My name's Peter Gubbins. I'm the CEO here at GTR. And I'd like to wish you all a very, very warm or chilly warm welcome to GTR Africa. Thanks to all our friends and clients from all parts of Africa who are here today. It's a bit of a chilly welcome to you. I was in Joburg last week, and it was a lovely sort of 23, 24 degrees, and we were playing golf at Royal Johannesburg Country Club. We had a lovely golf day there for a load of clients, and very different for the guys getting off their flight yesterday morning from Johannesburg to be welcomed by 3 degrees and sleet. But apologies for the weather, but we've got a nice, lovely day here for you today, and a very warm welcome to everyone, and thanks for making all the effort. We've got people from all parts of Africa, and it's great you made the great effort to come out here, so much appreciated. I think it's the same message usually I give out to these events, and it's if you look at the delegate list, we've got, I suppose, about 600 registered, quite a few obviously drifting in throughout the morning. But what you'll notice is, you've got international banks, you've got banks from all over Africa, export credit agencies, development agencies, ECAs, corporates, traders. It's very rare to be, to have the access for a whole day to all these companies and people that make the world of trade finance, commodity finance, export finance, infrastructure finance go round. So please do take advantage. Go and introduce yourself. Go to all the exhibition, go to the exhibition halls. Go and meet all the sponsors, because you're all here to do business. You're here to learn, but you're here to make contacts and do business. So please, please do that. The more you put in, the more you get out. So that's my sort of message for today. So please do go ahead with that. You will notice as well, you'll be when you go around the exhibition hall, what you'll see at the bottom left is the stand for How Many Elephants, which is our charity for today. Now, we're going to be hearing a lot more from Holly later on. But I think, as the name suggests, How Many Elephants, the charity concentrates on wildlife conservation, particularly elephants, and supporting women rangers. But please do go and have a look. There's 2 amazing paintings there, and there'll be an auction later on today. So please do go and have a look. 2 amazing pictures and a fantastic charity. So please do go and have a look, and you'll hear more from Holly later on. So without further ado, I'd like to welcome today's chair, who will be very familiar with many of you who've come to the GTR GTR Africa conferences around Africa for many years. Nick Oliver's been a regular at our Nairobi conference, our Cape Town conference, Nigeria as well, and I think an ever-present. In fact, I think you're a gold card holder with GTR. Nick is CEO of Globespan, who infrastructure specialist around Africa, and I think Nick will probably tell us a bit. But he's got a multitude, a huge wealth of experience of projects and infrastructure and dealing with events in Africa. So if you could put your hands together and give Nick a warm welcome to the stage. Thank you very much.
Peter, thank you. When it comes to Nairobi next time, it's the Windsor, okay? Ladies and gentlemen, for those of you who have been fortunate enough not to meet me in the past, my name is Nick Oliver. I've been running around the continent for the last 25 years, making a nuisance of myself. But in that time, I think we've seen everything that can possibly come over the hill towards us. I won't bore you now. I'll bore you later on the first session. But I've got to remind everybody, please, to turn off their mobile phones. Any phone that goes off, you will be, I think Peter's already said where the charity is, to go and make a donation. You've got the evaluation forms. Please do fill those in. I believe I'm winning it, but do fill those in and hand those in, please, during the day. And the GTR take no responsibility for your belongings that go missing, so please keep them with you. There is an event app. You can put your questions through the event app, organize your meetings, etc., etc. And it says here that I'm not to go beyond 9:15, so I can keep quiet very shortly. There's a lot to fit in today. The morning sessions are going to look at Africa trade during these volatile and changing times. We will look at the challenges, the opportunities, the answers, and how Africa can become more resilient in global changes and shocks and build on that existing trade. So, without any further waste of your time, if I may, I'm going to introduce, with great pleasure, Sir Stephen O'Brien. Sir Stephen was the former Under-Secretary General for Humanitarian Affairs and Emergency Relief Coordinator at the United Nations. And he's going to give us 15, 20 minutes of his experience to help us start the day. Sir Stephen.
Well, thank you very much indeed, Nick and Peter, and good morning to you all. It's a warm atmosphere, even if it may be a bit cold outside, so we're going to try and keep it really hot and exciting for what are the opportunities right across the whole continent of Africa, in which you play such a key part. I'm very grateful to GTR Africa for giving me this opportunity to share my enthusiasm and experience of all matters African, and to Jack Longman, who's coordinated all the arrangements for today. And I'm glad to be sharing this first session. Following me will be Hannah, who will be introduced to you, because she comes from the Department of Business and Trade, which is the combination of the former Department of Business and the Department for International Trade, of which I was a non-executive director in both until the day after the current Labour government was elected. For reasons, of course, I can't quite understand, I was asked to step aside on that first day. So it'll be interesting to see how the interrelationship between the support from our government to help penetrate African markets and to grow our activity and market share is being supported through the public sector, whilst, as we all know, the real driver for progress, for partnership, for the excitement of being able to both make money and deliver goods, services, and increase the overall well-being of the peoples of Africa and the returns to the financed and investments here is really a function of a highly productive and a highly efficient private sector. The African context is also one which in particular, although it's by no means unique across the world, it is in particular one where the expertise that has to be brought is one that straddles public and private sectors and the understandings that go to really meeting the demands that come from both those aspects of public policy and private incentive, and matching those two in a way which is both straightforward and reliable is the holy grail to being successful, particularly in many of the countries and economies of Africa. I'm going to be trying to give some form of contextual meat to today's proceedings on the basis that the experts are here in the room. They're you. You're the people who make all the decisions and take the risk evaluations that lead to how things get financed in order to produce the right results. And it's quite clear to me from the order paper that the panelists that you've got and all the speakers, as well as all of you, are the experts. So my job, as I see it, is to try and lay a context of why, in the context of trade, exports, imports, infrastructure, financing, the fantastic and overwhelming needs that there are to be met on the continent of Africa, and what so many of the assets and peoples of Africa are able to help service around the world in terms of trade and materials. And it's that context which gives me a sense that there is every ground for both optimism and immediacy and urgency, and a sense that we need to get on with it, but in the right way. But it's all very well having confidence. They're easy words. What really matters is also being able to apply at all times fantastically good judgment based upon experience and based upon a real understanding of the risks and exposures so that things are not knocked off course. but it's just common sense. Currently, Africa is a continent which is, at the moment, on the latest figures that I've seen, only about 2% of total global trade, when it's got assets and populations which patently require us to be tapping into that in a much greater way. And there is a question mark. Why, given past record, why is the UK currently, despite ambition, why is the UK currently underplaying its role in the amount and volume of activity across Africa, notwithstanding that there are humongous numbers of very high and successful UK interests and partnerships right across Africa. And at that point, I think it's really important, because I don't need to say it really in this room, but when you're speaking in any audience, when you talk about Africa, most people see it as sort of one entity. Well, it isn't. As we all know, it's 54 different countries, different economies, different cultures, peoples, experiences, challenges, and opportunities. And each and every one of them needs to be looked at in a very distinct way and with some precision as to the opportunities that exist. And it's now no longer a question of, as it has been in the past, seeking to impose some form of Western finance model onto Africa. It is now a partnership recognizing that the African Union, the AfCFTA, the WTO, all those have equal and important applicability right across Africa. And it doesn't matter whichever type of figures you pluck from the air, every single one of them shows at the moment, right across the continent, that there is an expectation of growth. And therefore it adds to the common sense that we should be focusing on following the trend. It is clear Africa is one of the growth opportunities of the world in the coming times. Despite, as was very much trailed in the introduction, these incredibly volatile times, and for somebody like myself who has been both in the public and the private sectors, both here and internationally over the various decades, we still do, albeit it is under incredible pressure, we still do have what is called a rules-based system. What grew out of the late 1940s, the lessons learned from global conflagration, that we have a United Nations which so many of its rules are honoured in the breach. I carry in my pocket at all times my copy of the Charter of the UN, which is something, as it happens, I bought in my very first week when I went up to Cambridge. So it's got my name and the date I bought it in. So when I became Under Secretary General at the United Nations, I was very pleased to get Ban Ki-moon to countersign it, and it's a very precious document. I still believe this is one of the best pieces of written English that man has ever been able to produce. The trouble is it's so honoured in the breach rather than as it should be, because if it were, then I think we'd all have a much more predictable, peaceful and opportunistic world. But in addition to that, under the rules-based system, which is important because of the certainties and the predictabilities which are absolutely fundamental to being able to do good business. You have got the huge initiatives in delivering public goods, whether it's the Sustainable Development Goals, on which we're sadly well off track, which cover a huge number of the human development indices. You've got the progress, which I've been obsessed with for the last 45 years, of trying to bring down the burden of completely avoidable and treatable mass transmissible diseases, which tend to be mainly across so many parts of sub-Saharan Africa in particular. My particular passion, if you like, has been trying to bring down the burden of malaria, and collectively we've been successful over the last 20 years to bring down the deaths from about 3 million to 500,000, still 500,000 too many, slightly going up at the moment with comorbidity, but there is a map which is going from red to green, which shows how the progress. That really matters when it comes to sub-Saharan Africa, because suddenly people are not fearful of dying, they're more fearful about whether I'm going to have an opportunity as I survive. And that, of course, is leading to not only the continuation of huge numbers of children per family, because, of course, if you're likely to lose children, you produce more, whereas the more you have the confidence they're going to survive and that they'll get an education, then family numbers tend to reduce, and that tends to produce a greater opportunity for people to be productive and to contribute to growing economies. And over the time of these great volatile uncertainties, we've also been able to produce an agenda for humanity, things which are very clear. The evidence is obvious, and you would say, why did you need to actually do the research? But it is clear the worst thing that can happen on every indices, of course, is conflict, and we can see that in Sudan today. And so when you're investing in a country, or when indeed in companies in which I've been involved, we've invested, either there's conflict, or there's insurrection, or there's a coup, or there's some form of event which undermines all the certainties that you need in order to be able to have the predictability. For us, the issue, of course, is being able to have that sense of confidence that what we promise to do, either financing or indeed production in addressing markets, is going to be deliverable. And of course, if you have an interrupting event, that throws everything out and undermines confidence, not just of your deal, but of course, everybody else is coming after you. So when we're looking at the rules-based system as underpinning these levels of confidence and certainty, we have to recognize that they are currently under the most enormous strain. And the strain is not just the fact that we've got, with Russia going into Ukraine, the idea that it is no longer there's an impunity to aggression, that borders don't quite matter as much as they did, that the idea of that Westphalian solution and indeed the post-colonial settlement across the continent of Africa, where borders became settled, so you knew that that was the country, that was the economic entity, that was the identity of the peoples, that was the chance to have the democratic institutions built for you to be able to have good governance within that and to be able to trust that as you move forward. And for the assets that live within those borders are the ones which you are able to then contract with. And let's be clear, when you divide up those 54 countries into the commonalities, you've got in the African continent, apart from some of the islands around, which of course will all have their own characteristics, at the moment you've got different competitive advantages. And it is important, as we consider the future, that the MENA countries, the Middle East, North African countries, will always have one set of characteristics. They tend to have the ability to address the Mediterranean markets, so they have a ready access to the very high purchasing power of the European market, albeit often on a different set of arrangements in terms of the way law and contracts works, so people tend to use arbitration proceedings much more readily. Compared to many of the Francophonie and the Anglo-inherited post-colonial countries, which have got different forms of governance, some of which have been obviously derived from original impositions, to ones which have been completely developed for their own purposes. Whichever they are, there is a clear set of competitive advantages which are now beginning to emerge. If you are on the eastern littoral, if you're in my birth country of Tanzania, then clearly, if you've got assets below the ground, yes they have, if you've got assets on the ground, fantastic people, good agricultural land, reasonable climate, and you've even got fantastic amount of airspace over the ground, and you've got an eastern seaboard addressing the future markets of the world, India and China, then clearly you've got a cost advantage to those who are sitting on the west coast, where the demand coming out of America is diminishing, where the partnerships between South and Central America and Africa are less potent than the ones on the east. And so clearly you've got those differential competitive advantages which are beginning to emerge. At the same time, as clearly China recognizes fully that it is trying to secure through its Belt and Road program, which is a very nice term for securing its supply chain against all comers, and is actually a very aggressive, competitive, and at the moment exclusionary process, and indeed very successful, very strategic. Last 20 years has put people under enormous pressure, suddenly realizing that China is securing the supply chains. But, and I suppose this is going to be the essence of my concern and my message to you this morning, as we look to answering the question that's been posed to me, is this a time to be bold? And I'm not so sure bold's the right answer. I think it is common sense for us to be really powering into the opportunities that the African continent and all those 54 countries represent. I think we need to recognize the huge competitive advantages that those, particularly on the eastern seaboard, particularly those which are not landlocked. If you're Malawi, it is really difficult, notwithstanding they found a bit of uranium in the north. Nonetheless, there's not much, and I don't want to in any way disparage Malawi, but it's a really tough business. If you're Malawi, there's not much you can do that your neighbours are not doing at least as well, and then you're stuck because it's pretty difficult to get anything through Mozambique, so you have to take your stuff down to Durban to get it out in order to have any market that's outside your country. And at the same time, you've got a huge amount of pressure in getting maize grown in order to feed your people, at the same time as Zambia is calling upon you to make sure that you don't reduce the prices to make that accessible to people who need it. So a landlocked country is in a really difficult position because they're dependent on hugely successful intra-Africa brokered deals, which are not that easy or available. Although I'm very pleased to say that the initiatives such as I was involved when I was a minister at DFID in things like Trademark East Africa have helped to break down some of those barriers, particularly benefiting, for instance, Uganda, enabling them to get to market, i.e. through Mombasa Port, extremely fast. I have a particular wish to mention Mombasa because that's where I went to school, and I have a feeling that that was a good place and I was lucky to be there, having been born way down in a little fishing village called Mtwara when it was Tanganyika rather than Tanzania. So my Eastern Littoral credentials are present but also biased, so I do admit to that. The other main issue, and it also relates to the current challenge, is whilst these massive population trends and growth, the youth factor of Africa, particularly Nigeria, Ethiopia emerging, Egypt, which has always straddled being part of the Middle East under the African continent, and is able, because of the Red Sea as well as the Mediterranean, to address both north and east, and South Africa and those who have got huge and growing populations. They're characterized by being extraordinarily young, very techy, very communicating extremely easily and well, and leapfrogging so many of the Western models. But at the same time, as you've got all those new consumers, the growing middle classes, the demand for consumer products, you've still got the fundamentals of so many parts of Africa where the natural resources, which are required in order to fuel not only the old but the new technologies for the growing global population, is being taken from Africa, and the added value is being processed elsewhere to then supply products and services to the high purchasing power markets of the world. And the thing that really is driving many of the decision-making in either governments or boardrooms in Africa and in the countries who've got these natural resources, which are readily available and are highly investable, is they want to see the value added in that country so that they can both supply their growing new domestic market, as well as being able themselves to get the premium that comes from being able to sell it into the high purchasing power markets. So the opposite to what is actually the current successful Chinese Belt and Road program. And actually that is really a replica to some degree of the former Western approach based upon, in the past, hydrocarbons and some minerals. Now we've got the competition for rare earths, and at the same time we have the challenge at a geo level, we've got the collapse of what was an underpinning confidence of so many of the issues which were high expense, but not really part of the commercial life. They were simply part of social fabric of aid, has now broadly been withdrawn. So you've got the collapse of US aid, you've got the diversion of UK aid money, mainly into supporting the costs of refugees in this country, with a major reduction. I happen to be extremely proud of the fact that I was the architect of the 0.7% law, that we should spend that of our GNI every year on ODA qualifying spend. Now nobody talks about ODA. Certainly we don't get anywhere near 0.7%. And the whole of that, that promise to try and be a partner in supporting those areas where we can make sure the public goods are delivered in order to give platforms to countries that couldn't do it on their own, to enabling people like yourselves to be able to come along and finance those infrastructure and those trade contracts, which would then help them build economies to be able to tax for exchequer receipts and then make their choices as we've been used to in this country. So the challenge we've got is that the requirement in partnership going forward is that we recognise that there is a need for added value in the countries that we invest in, and rather than simply taking the raw material in order for others to have the chance to make the added value returns. So, as ever with a subject like this, one could range across each of the countries, one could range just at a continental level. The moment, I think, is now to recognise that with all these positive factors of a huge drive upwards in growth expectations, in population, in the survivability of people through good health, increasingly, especially girls in education, so you've now got an emerging, ambitious middle class with a techie savviness, leapfrogging the Western models, and with a recognition that we've fallen behind the Chinese model, a very strategic model over the last 20 years in bringing a lot of the assets they want from Africa in order to fuel their economy. We now need to compete to get back on that. It's highly financeable, highly investable for products which a lot of the high purchasing power markets want. And so my message is to look at the future with hope, with optimism, with a sense of immediacy, and to recognise that the model has changed. It's not a question of just looking at two parties trying to form a contract, but to find the right form of partnership which enables the benefit to flow into the country. At a micro level, the best way I can describe that is to show that post the Second World War, the British, with the best of intents, in my birthplace, in Mtwara, they introduced something called the groundnut scheme. It'll be a matter of history books for you. And the groundnut scheme was all about growing groundnuts all around Mtwara on the border of Mozambique. And then they were to be exported. And of course they were. They went off to India. India then decarcinogenated them and salted them, put them in packets, and they were the peanuts that appeared on all the hotel tables for the next 40 years. And what happened in Mtwara? Everybody went bust, nobody had a job, and then there was one disease, killed the groundnut market, and that was it, all over. Terrible. Instead, what happened is 20 years ago, Olim from Singapore came in, built a factory at Mtwara, and Mtwara now takes all the groundnuts and they process them in the factory there, and they package them, and they are then exported around the world. And so that is now employing 2,000 people. It is fantastically profitable. It's given Mtwara a huge incentive to then rebuild their port and to start really being able to service a growing town, which has moved from 13,000 to 250,000. And that's now a good example of where, if you put the added value in, we've always known that's been true of hydrocarbons, but the future is probably far wider than the hydrocarbons. So there we are. That's, but my message is partnership is very positive, but we've got to have good judgment, accept the risks, and recognise that the Western model is, at the same time, not always relevant, and at times means that we also need to have the discipline to be able to say, no, we're not going to get involved in that one, because it needs to be on the terms where all of us can sit in our boardrooms and be absolutely clear that they're doing straight, predictable, and good deals. So, good luck. I hope you have a really productive day. And my goodness, we need you all to be financing these great deals. There are a lot out there to be had, and it's both infrastructure and trade, export, import, but above all, let's focus on servicing the markets of Africa, because if you build great home markets, you also then have brilliant export markets. Thank you.
Sir Stephen, thank you very much. Ladies and gentlemen, if I can introduce Hannah Williams, the Director of Trade and Investment for DBT, who is an overview of where they're at, and then we'll have a little bit of a chat afterwards.
Great. Thank you, Nick. Thank you, GTR, for having me here. So good morning, ladies and gentlemen, privileged guests. It's great for me to be here today to reflect on the evolving landscape of UK-Africa trade and investment relations. In my role as Director of Trade and Investment for Africa, myself and colleagues are very much at the heart of this agenda. And I'm speaking to you today to give you the UK government perspective on how this trade and investment landscape is evolving across Africa, covering both the challenges faced but the very many opportunities it presents. So I'll start by giving that sort of bigger picture overview, hopefully building on Sir Stephen's points of optimism, immediacy, and partnership. The UK is undergoing a strategic realignment of its relationships with Africa, moving from that traditional aid-based model to one focused on mutual prosperity through trade and investment, one which reflects the diversity of the continent. And we're very clear that one size does not fit all, but that the opportunities are very much there. Feedback from our partners in Africa has been that they want the UK to support their growth ambitions, not prescribe models, thinking with Africa rather than doing for Africa, and the UK government is very much listening to that. This approach aligns with the African Union's Agenda 2063, as well as with the UK's trade and industrial strategies. Trade and investment are very much at the heart of this agenda. Africa is home to 11 of the world's top 20 fastest growing economies, not to mention its immense natural resources, entrepreneurial energy, youthful and rapidly growing populations. The opportunities for UK companies to meet these challenges and offer solutions are immense. Just in the last few weeks, I've been in Ethiopia, for example, talking to colleagues there about the new Bishoftu airport in Addis Ababa. This is the type of opportunity which UK companies are extremely well placed to take advantage of. The UK government is also responding with tools that support this agenda in unlocking capital, reducing risk, and building long-term commercial ties. UK Export Finance, the UK's Export Credit Agency, or UKEF, is absolutely instrumental in supporting UK businesses to deliver infrastructure and renewable energy projects across Africa. And Africa is now UKEF's largest market for new business, and it's seen its portfolio in Africa expand from around £600 million in 2018 to 2.3 billion in mid-2024, reflecting both the scale of opportunity and the UK's sort of suitability and fit to that opportunity. Other tools in this toolbox also include British International Investment, or BII, the UK's development finance institution, which has invested $5.6 billion across 810 African countries, and the Developing Countries Trading Scheme, which has recently simplified its rules of origin, enabling manufacturers in Africa to source inputs from across the continent while still qualifying for tariff-free access to the UK market. That being said, despite this opportunity, we must be clear-eyed about the challenges. Economic instability, regulatory hurdles, gaps in infrastructure, some of those logistical challenges which Sir Stephen mentioned, these are but a few, but none of these challenges are insurmountable, and I think that's the key point. These call for policy coordination, blended finance, and risk-sharing mechanisms, areas where the UK is actively engaged. A key area of the UK government's work is also in market shaping across Africa, so working to reduce some of the structural barriers preventing UK companies from accessing opportunities in markets. The recently announced Ricardo Fund is a key part of this and will provide billions of dollars to support UK regulators access and overcome some of these barriers. Another key pillar of the UK's approach to its work in Africa is in our very strong support of the AFCFTA, or the African Continental Free Trade Area. This is a truly exciting development where the UK is supporting with technical assistance, supporting digital customs systems, and aligning our trade preferences to complement regional integration. The AFCFTA will provide a platform for industrialization, local value addition, and will increase foreign direct investment into Africa, as well as increase economic resilience. This is very much a key next step in Africa's emergence as a global hub for growth and a UK priority, and a really exciting development. As we look to the future, the UK government's vision is clear: a UK-Africa trading relationship that's defined by shared prosperity, digital transformation, climate resilience, and inclusive growth. We will continue to deepen our partnerships, mobilize private capital, and support African-led solutions, taking a clear-eyed approach to the economic realities on the ground and providing targeted specialized support from the UK government. Trade and investment are very much central to this vision, and the trajectory on this in terms of UK-Africa trade has been strong and positive over the last 10 years, and very much expect this to continue. It's very much an exciting time to be at the heart of this agenda, and a great privilege to be supporting the UK companies at the heart of it. Thank you.
Hannah, thank you. Thank you very much. We're going to just spend a few minutes just talking about a few things that have come out of those talks and questions that I've been given in the past. So, Hannah, now, we've heard a lot from Sir Stephen just now, and we are aware of the possibilities for UK in Africa and Africa in UK and the challenges. We are repeatedly pushed to increase our footprint in Africa. And there has been a number, shall we be kind, reorganizations within DBT recently. And despite the talk, it would appear that Africa isn't exactly the highest priority within government at the minute. How is DBT preparing for the future to help UK and Africa increase that two-way trade that we hear so much about and we talk so much about, but where the reduction in support in Africa for businesses has been ongoing?
Great, thank you. Thank you, Nick. Is that on? Yeah. Okay. Thank you. So, yes, very much a difficult question. I think it's no secret that the UK sort of fiscal environment at the moment is constrained, and one of the UK government's sort of areas of work at the moment is to reduce the number of civil servants, reduce the size of the civil service, which has grown. That does include the UK Department's, the UK Department for Business and Trade's overseas network, and has seen a reduction of our footprint, both in Africa but globally. This is very much being seen as sort of a restructuring rather than a reduction of the support available. Both the industrial and the trade strategies talk about the prioritization of certain sectors, of certain markets, those which have the largest contribution to UK growth. And this restructuring will see us continue our strong support for those UK businesses that need it, those projects where the UK sort of fit and suitability is strongest, and ensure we are able to continue providing that support in the long term, while perhaps reducing some of the work that has less of that sort of government additionality, i.e. if government is not needed, I think it's key that we step out of the way rather than try to insert ourselves, and I think that this restructuring is a key step in that direction. I would also highlight the role of the Foreign Office, which has an extensive network across Africa, as well as the work which we will continue to do and look to strengthen with chambers of commerce, etc., to further build that partnership and ensure that UK companies are receiving the support to do business in Africa when they need it. I think the numbers and the sort of trade trajectory is very much a positive one. It's been increasing sort of on an annual basis of around 12% 0.7% in the last 10 years. And that's something that we are very optimistic about and will look to continue. I sort of mentioned also the role of UK export finance and the importance of many African markets in UK exports finance's work. And these are very much areas that we are optimistic about, but we do also need to sort of be realistic about where we are directing our energies and ensuring that those energies are directed to those areas which have the most impact. I'll stop there.
They're very, very good official answer. But thank you. I think there's more to be said on losing the expertise, perhaps, that has been built up over the years. So, Stephen, we talked about the demise of trade, aid, and many African leaders from where I sit have seen this as a good thing. Because it's now forcing the need to grow and to trade. But there are real consequences at our grassroots levels in many, many areas. How are organisations such as the Global Fund reacting to this, and how do you see this all ending?
Well, you're completely right. There is a big reduction in aid. We now have effectively a lack of political driving motivation of the use of the phrase ODA. The OECD doesn't really carry quite as much weight in terms of the expectation of the partnership between the rich West, if you like, as part of the original UN deal that the Security Council could have responsibility for peace and security post-Second World War, just 5 countries with a veto, basically, which is not going to change anytime soon, whether we like it or not, in exchange for massive fiscal transfers, effectively from the rich, so-called then First World, rather patronizingly, to what I think we would now call the Western economic model, to the emerging nations, so that they could build economies and become full of agency. And the whole drive of aid in the past has been not just survival, but to enable people then to thrive and to have full agency. You could say a lot of it has been very successful, and this is the natural progression. But it has also taken responsibility for those things which are either too big for one country, whether that's transmissible disease or international crime or climate change effects, things which straddle all borders. You need to have some form of pump priming by the international community in order to take up what is otherwise an absence of initiative and affordability in local markets. So you're quite right, there is a major reduction in aid. And the answer to that is, as we take the premium of agency in so many of these economies, is that the private sector is able to do its deals which are profitable, and then you build up a good inland revenue, bourse de recette model in each of these countries, which takes into exchequer that you avoid, because you have increasingly good governance and expectation and accountability for that, to make sure that that comes into an exchequer so choices can be made, democratic institutions can be strengthened, and choices can be made to build the infrastructure and the economic underpinning of any growing economy to service growing populations. And so the private sector has to be the driver, effectively profitable driver, so that, yes, they do pay their fair rate of tax, so that goes into an exchequer, so that that can then take up what was always called domestic mobilization, the successor. And that is what, when you talk to our partners in Africa, it's what they want. They don't want to be completely on the receiving end of handouts, except the support for those things which cannot be the responsibility of any one country. Because, for instance, malaria, unlike HIV/AIDS, is a disease of the poor. It's a disease of people who are in remote areas, in climates where the mosquito, which carries the killer falciparum parasite, thrive. They don't. The last case we had here in the UK was in the Romney Marshes in 1936. We forget that we did have malaria. Cromwell died of it. So it is possible, and we may well find that with climate change we get it back. But if we keep on bearing down on things like that through the aid system, but that'll be a much narrower spectrum compared to what it's been, and it's going to be up to the private sector and through finance deals that you're all able to do, that gives an exchequer the chance to be able to have the receipts that then make the choices that we are all used to in the model we live under.
Thank you, Sir Stephen. Thank you. We're going to run out of time, and I do want to have a few final thoughts at the end. However, Hannah, just to round off on some of these questions, I mean, there are clear opportunities in Africa, and from your experience, we find that UK companies, the lack of UK companies on the continent, how do we persuade, how do you as government, as the civil service, how do we persuade companies to take that leap and get into the continent and take advantage of the opportunities that we all know are there?
So great question. Thank you, Nick. So I think one of the ways that we do that is through addressing the sort of the perceived risk with the realities of risk. And as we've, I think, both touched on, there are inevitable risks, as you would expect, doing business in any sort of developing regions of the world, or even some of the more developed regions of the world. Companies will face risk. And I think a key way to address that is through UK government sort of support on the ground. We have those very deep relationships, we have those networks, and we are able to some extent, de-risk some of this activity. That's partly through providing sort of up-to-date intelligence, sort of real-life intelligence on the ground. Some of that is through sort of supporting UK companies build the networks that they need to do business. Some of that is through those tools that I've mentioned, UKEF being one in particular, but there are others. And then we would also advise companies to sort of really consider in depth, is this the right market for them? Is the opportunity there? What's the sort of competitive landscape look like? Will they be able to sort of compete on price? What is their unique service offering? Have they thought through the logistics, sometimes complex, sometimes not as complex as companies sort of expect them to be? Have they spoken to their peers, their other companies doing business on the ground? These are all sort of things that I'm probably sort of preaching to the choir, but things that we would encourage companies to consider. And then just to sort of really leverage the support that is available. I think we've touched on the fact that some of this support is perhaps not always as strong as it has been in the past, but it is nonetheless there. There is a lot of expertise, both in government and in the sort of organisations around government, that is available for companies, and we would really encourage them to look deeply at the many opportunities and sort of how those fit into their business plan and their sort of unique offer. I think a particular area of sort of really where it's really exciting is sort of the UK services offer, and we've seen significant increases in UK services exports across Africa, and this is really an area where the UK does have that competitive advantage, and it is a really strong offer that I think we are sort of watching this space and hopefully helping that sort of growth to go in the right way.
Hannah, thank you. I think I'm getting the evil eye moving on. But look, there's a couple of questions coming from the audience there. And to both of you, I mean, your views. We see our competitors sending their senior politicians into Africa the whole time. I've seen companies about to close a major deal. They ask for a senior minister. That senior minister arrives. As we see there, the last Prime Minister from UK to visit Africa was almost a decade ago, and it's not quite a decade, but 2018. How do we fix this? Because it is important.
Well, having been a minister, and I did go to Africa many times. In fact, there are only 9 countries of Africa that I've not been to over the time. And there is no question that in many countries in Africa, there is always that final signature on the deal, and it's normally the president's. And so they expect there to be a counterparty in the room, and it tends to be a representative government. Whilst the UK government is not a party to the deal, there is an expectation by so many within a deal that is coming from a country in Africa, that nonetheless it has the sort of government's blessing. And therefore, having ministerial visits, having a chance to have senior civil servants and government country representatives in the room really matters. So your point is absolutely valid, and it is currently a competitive disadvantage that we suffer by not really allowing that to happen in a very easy or free and available way. I do think it is a question always. I speak with the experience of somebody who's had the privilege of being a minister in this government, in the government in this country, and you can imagine very capable civil servants. They produce enormously clever papers in your red box, which you're studying bleary-eyed at 3 o'clock in the morning to make sure you've done it all by 8 o'clock the following morning, hand the box back with all your notes and things, and they're saying the priority for your diary, Minister, is as follows. And so rarely did it include Africa, even when I was the Minister for International Development in Africa and the Sahel and the whole thing, and the security when Mali was kicking off. And so it was really difficult to get the chance to go, because either you had to come back and vote, or it was a problem of prioritising that against other opportunities, such as, do we do a trade deal with the United States? You need a minister for that as well. So you can see where the problem lies, but the fact there is a reluctance, you're completely right, it's a competitive disadvantage. I really think it is something which I know, Hannah, you're aware of. We need to find a way of fixing, because we need to make sure ministers really take, and it's why David Cameron, for instance, introduced a huge range of trade envoys. The difficulty was that didn't look quite senior enough to carry the weight that was necessary in those rooms when the final signature had to happen. And that's what we need to recognise, is we need some kind of deliberate calculation of the heft that's required to get you over the line.
So I'll just jump in on this. So I mean, I completely agree. It is a challenge we are up against. You know, in Morocco, for example, Macron will jump on a plane and sort of be present and leading a business delegation much more frequently than we see amongst our politicians. That being said, I think Keir Starmer is going to the G20 in South Africa. He will have a number of bilateral engagements with African leaders at that event. We also are expecting senior engagement in Egypt later in the year. We had the former Foreign Secretary engaging with the Kenyan president in London not too long ago. There are examples of it. I completely acknowledge the challenge that this is perhaps not at the level that we would like it to be at. And as Sir Stephen has pointed out, the trade envoys do plug some of this gap, but they are also not sort of necessarily the level of seniority that we would like to see. That being said, I would also like to highlight, just last week, we held the Western Central Africa Trade and Investment Forum, which is the 4th edition of that event, but held for the first time in Africa, in Togo. And I think this is the type of activity which is really demonstrates the way we should be working with Africa. So, you know, going out into the continent, working in partnership, holding our events, our major engagements in situ, in market, rather than expecting African leaders to sort of engage in London. And that, I think that is something that has been acknowledged by the government. Obviously, you know, as Sir Stephen said, there are challenges, there are sort of other demands on their time, which we are constantly working to address. But I think our role, sort of both as civil servants, but also as external businesses, as external interlocutors, is to keep making that point to ministers, to government, to say that, look, the opportunities are there, and senior engagement really does make a difference, really does move the dial. So something for me to take away, but I would also encourage others in the room, in your engagements with ministers, with governments, to continue making that point as well.
I should add that tomorrow is a test case. It's the 8th replenishment of the Global Fund tomorrow. There had been a hope that we could get to $21 billion for the next 3 years. I'm on the Friends of the Global Fund, so I need to be very careful not to say more than I should. But I think having an expectation of as much as half of that is optimistic. The UK government has very well and generously committed £850 million. The Gates Foundation, $850 million. USA, so far nothing. And the big question is, will Macron fly to Johannesburg tonight in order to pledge €1 billion tomorrow? And all the indications are he may not, because of the current French crisis, which would be disastrous for the Global Fund, going back to the previous question, but also it shows you the sign of the times, how these things are shifting, and how the former very wealthy economies of the West are now struggling to meet their international obligations. And therefore, what's going to have to take up the slack is, in the end, not other countries, because they're not forthcoming. China's not being successful across Africa because it's been giving huge amounts of money to the Global Fund. Let's be clear. They are doing it because they are really promoting this blend of government-supported private sector deal-making. And what we need to do is to get that, and at the same time make sure the value added sits within the countries whose raw materials people are wanting to add value to, rather than extracting all the raw materials just for the sake of making sure that the added value and the premium can be secured in other economies. And that's the future hope. I think it's possible, but it's going to take a huge amount of effort and discipline and a massive focus on who and what really matters in terms of the ultimate benefit and returns.
Stephen, thank you very much. We are out of time, but just takeaway points. Stephen, if you were looking to invest in Africa, what would you put your money into?
Well, my first answer is very clear: energy. If you can find a way of investing to produce energy for all in the countries of Africa, then of course you've got the underpinning, as has been proven over history, of every economy that's developed well. They've had access to energy, which has given them the chance to produce, has given them the chance to have a quality of life where they want to really be part of that and to feel secure. So I would be investing in energy, and the fundamentals haven't changed. When I was an industrialist way back before I was a politician, I would be scanning the world every 3 months. I was building making very heavy building materials. So, of course, there was no point in thinking of exporting them because I'd meet the competitor 30 miles down the road. I needed to export my manufacturing technology for roof tiles and bricks and digging quarries. And that meant I had to go where the stone or the material was, and then I had to develop it for local markets. So, yes, I'd look at the lead indicators, I'd look at prosperity indices, I'd look at all the things which gave me 3, 6, 9-month lead-ins. But above all, I'd be looking to the normal fundamentals. Does it have rule of law? Does it have a commitment to decent governance? Does it have courts that you can have access to? Can you get paid, and can you repatriate dividends? Are there some skills and a workforce you can tap into? And above all, are you going to be able to have an investment which is going to be strategic, looking to grow and underpin a market going forward, and that you're going to have access? And above all, trying to forge partnerships, a point which I didn't make in my opening remarks, but I do think we need to think much more carefully about joint ventures. They're a way of harnessing the best of both sides, and what tends not to ever get said is joint ventures are a way of keeping others out, because it's quite difficult if you want to take something over and you're trying to take over the joint venture interest. You've got to have every party agreeing, which isn't always easy. So actually, it's one of the best defenses against the Belt and Road strategy of the Chinese, is to forge joint ventures in many parts of Africa. And that would then lead you very naturally to go from not just raw materials and those services which are part of my investing in you, but I want the return back here, is a partnership where the returns are shared and you get a win-win. So that would be my urge, is to go for energy and to look at joint venturing and to make sure that there is a real commitment to the long term and not just short term, and certainly don't just pile debt on it.
Sir Stephen, Hannah, thank you very much. We're out of time. If we could show our appreciation to the panel, thank you very much.